Look at Visa up 4%. Investors are looking ahead to, as Charles just mentioned, Meta, but also Ford, which report after the bell. So let's get right to the floor show. Our traders of the hour, Dutch Masters and Teddy Weisler. I love this pairing of you guys. Dutch, we're also exactly 1 week away from the big Fed announcement on interest rates. What's driving your trades right now?
Well, we wanted to see the dollar and the rollover, and we wanted to see bonds roll over and stabilize. We've seen both of those things happen, and we wanted to see a Fed that was going to at least start to slow down, and the narrative for that started on Friday. So we went bullish Friday, Monday. We closed out all the shorts, and we took some loss on the shorts to do that. But when we did the flip, we went into a lot of the more high-octane, tech-oriented stocks, and they've served us very well.
And Teddy, we're going to get to some of Dutch's picks right now, but you have said in the past several hits with us that you say cash is king. And what you really mean is, I mean, nobody just sits there with it under the mattress. You park it in treasuries, but you're going to make the case for treasuries. You got to explain to our viewers exactly what you mean by cash is king.
Well, cash is king because when we get in turbulent markets like this, where there's a lot of volatility, and a volatility in this case is a code word for a down market, it gets really tricky, Liz. And I think it can get very expensive for most folks trying to figure out what the market's going to do. So perhaps the smartest thing to do is, number one, either do nothing, or if you can, get to the sidelines, raise some cash. Interest rates are up, so you're getting some juice out of the cash, which was not the case 6 months ago. And we have picked on the 3 month Treasury as a source of cash, simply because the interest rates on the 3 month Treasury are about 100 basis points better than the best money market fund. They're easy to buy, very liquid, not a lot of risk, but it is basically a safe haven for cash until some of these unknowns, which we've talked about relentlessly, right. Interest rates, inflation, Ukraine, midterm elections, so forth and so on, until we get some clarification with some of these unknowns, perhaps the best place to be is out of the way, on the sidelines. Cash is king. You can't get hurt with cash in the bank. You can always play, stocks, Liz, are like buses. You miss one, there's another one coming. They just keep coming.
Yeah, but you got to hunt them down. Dutch is a little more, not brave, but a little more gutsy, maybe. I don't know. That's not the right word. But Dutch, you actually have two names you've just added to your holdings. Let's talk about those. They are both tech names. Why did you pick CyberArk and Snowflake?
Well, we think that some of the old names that normally would lead are not going to lead. They're going to kind of go sideways or maybe underperform. We think that a lot of the great companies that have been public lately, like Paylocity and like CyberArk, are companies that are going to lead on the way out. For one thing, they don't have a lot of overhang, so there's not a lot of unhappy people who own it at a higher price who are going to sell it, sell into its rising. Secondly, we actually we agree with Teddy on the treasuries. However, we're very aggressive, so and we're always trading one way or the other. We identified essentially what we think was the biggest no-brainer since the history of mankind on the bond market, and that was to buy TLT. It's an unleveraged ETF, and what we looked at was if we're wrong and bonds go down another 20%, then all of us are going to be out of jobs and in the street begging anyway. So why not do it?
But this thing's down 35% year to date, Dutch.
I know. Well, we bought it at 94. Our initial target's 100, and our next target's 110. Yeah, and in a matter of a couple of days, some of our guys at the carnivores were buying the options on it, and they're up 25% in just a few days. We think that it can be bought in size because it's not leveraged and it's very liquid. And it's treasuries. It's not a stock. It's not a stock index fund. So.
All right. Well, Teddy, we want to put that full screen back up on what you say about treasuries. The 2-year right now is at 4.43%. But even the 3-month is at 4%. It's dead even with the 10-year at 4.0%. So, which one?
Well, I mean, I guess you sort of have to pick your poison there, Liz. The bottom line is 4%. Give or take a couple of bips one way or the other, 4% on your money, basically risk-free today, which was paying almost zero 3 or 4 months ago. Yeah. And to me, as Dutch said about his layups, this is a no-brainer. It's a layup for folks that basically just want to get out of the way until the dust settles with the markets. I mean, I think personally, I've been doing this for 60 years. I've seen this rodeo before. This is difficult. I don't think we're done yet. I don't want to get into a whole scenario of where we think we're going. But just as we're speaking, Google made a new low. I mean, what does that tell you? These are high-powered, big tech companies. Yeah, the earnings were okay. The guidance was kind of weak. You would think all the bad news is priced in. Obviously, that's not the case. Yeah,
Google right now, folks, down 9%. Hold on one second. Teddy's gotten very fancy. He says, I've seen this rodeo before. Teddy, great to see rodeo. We're going to talk about Rodeo Drive coming up. Dutch, Teddy, we got to run because we now, breaking news.